No country for small savings. That's the topic I have chosen for you on today's episode of Easynomics. I'm Siddharth Zarabi and you're watching Business Today. Welcome back. I've been off for the last few days because I was recovering from what we did at Davos at the World Economic Forum, but let me turn our attention back to our own economics and one of the key headlines, which is the interest rate cut for the employment provident fund savings that millions and millions, 60 million Indians in fact, subscribe to and invest in. And this savings rate cut, and remember the EPF is one of the most popular small savings in this country, comes at a time when the Reserve Bank has already done one installment of what it is called the return to pre-COVID interest rates. We saw a 40 basis points hike and now the Reserve Bank of India has started a fresh 3-day meeting from the 6th of June, Monday, and the result of those 3 days of deliberations will be available on Wednesday, the 8th of June, when the Reserve Bank of India, by virtually every economist, every pollster, and Business Today has also done a poll in this regard, a vast majority expects the Reserve Bank of India, the Monetary Policy Committee, to hike the repo rate, which is the rate at which the Reserve Bank of India lends banks money to lend forward to consumers, by another 50 basis points. So in a period of less than a quarter, we will see close to a 90 basis points hike. There will be some gap still left with the pre-COVID era. We don't know what normalization or accommodation the Reserve Bank of India will guide us towards as far as monetary policy and liquidity is concerned. But let's come back to the impact that this is having on the Aam Aadmi's savings. One data set which we would like to share with you and try and explain of how the pendulum is now swinging. Now, if we look at our savings, especially for the non-institutional, non-commercial saver, which means really millions of Indians, the bank deposits, the term deposit, not your savings account, not the savings account where you keep money in and earn a nominal rate of interest, the term deposit, which is a fixed product where you have to give this money to the bank and say, listen, I'm willing to give it to you for a period of more than 12 months or 24 months, 36 months, even beyond that, and they provide you a certain rate of interest on that. Those term deposits, the average rate is 5.5% if we look at it that way. And then if we go across the spectrum, we see that the EPF rate of 8.1%, which has now been set for the current fiscal, is lower than what has been done in the last few years. In fact, it's moved from 8.5% in the 2 years preceding, and before that it was 8.65%, and before that it was 8.55%. So clearly we have seen, if you ignore that 15.15 basis points hike, it's trended downwards. And this EPF rate trending downwards obviously hurts the savings pot, the retirement corpus that a lot of people are hoping to build. But why is this happening? Because on the other hand, if you look at inflation, which in India, for the latest data being available for the month of April, we are still waiting for the data for the month of May. That clearly shows that April consumer price inflation was close to 7.8% and wholesale price inflation was in fact above 15, almost 15.1%. Now, if you take those rates and you look at our savings rate, it's very clear that small savings are being completely disincentivized due to inflation. I'm not even talking about the tax treatment, and the famous shift that we had many years ago, moving from triple E, which is exempt to exempt tax for most products, savings products. That's a subject for some other time. The fact is that today inflation is eroding the value of your savings. And since savings by definition are money that is saved over a period of time and is meant for future consumption, the net present value is being impacted very deeply. And many of you must have already experienced it. If you set aside some amount of money last year to buy something, today that same amount of money will buy you a lesser amount or a less of that good, or even a lesser amount of that service that you intended to purchase. And that's why inflation acts in multiple ways. For the poor people, who a bulk of whose expenditure goes on subsistence and survival, which is daily consumption on food, because they cannot survive, they cannot participate in the labor force without consuming food and having the energy required to do that job. That impact for the middle class, the upper middle class, and those who have a certain surplus income that they can serve gets doubled, or it gets enhanced because the savings lose value due to a high rate of inflation. So that puts pressure for overall economy, because if lesser people save and if there is lesser money in terms of deposits by the people, then the total money, what is called the savings rate that is available, also goes down, and it has its own impacts in the broader process of economic growth. So in summation, we are now seeing a divergence between the savings rates that are available and the lending rates that the banks will charge us. That is going up, and therefore, as someone said, that perhaps the simple mantra of saving, investing, and therefore prospering is not working. Many of you have also tried to save and invest in aggressive manners. Many of you have gone into equities, and I'm sure some of you have even invested in cryptocurrencies. But as you have seen in the last 1 year, that's by far one of the most risky, sort of volatile ways to earn a higher rate of return. But if you are a conservative person who wants some interest and wants a sort of small nest egg for the future, for committed expenditures, or just as a safety net, it's very clear that the value of your savings is getting eroded. And and with what RBI may do soon to control inflation, and if inflation doesn't come under control, there is going to be further pressure on India's savers. And that's why we say this a bit tongue-in-cheek, that are we becoming a country where small savers are finding it difficult to get a certain reasonable return on their investment? And that means that the amount of financial literacy, the amount of time and effort that you need to invest to protect and grow your money becomes very, very important and very, very significant, especially if you are among those 60-odd million employees who are participants in the employee provident fund. I'm going to call it a wrap on this episode of Easynomics, and I promise you we'll come back, especially this Wednesday, to decipher what the Reserve Bank of India has done for the interest rates in the economy and what kind of impact it will have on you, me, and everyone else. Till then, I'm going to say thank you and bye-bye. We'll see each other again. Till then, do like, share, and subscribe to Business Today. We'll be back. Thank you very much for watching.
If you like the video, do like, comment, share, and subscribe.